Hello everyone and welcome to the Cyclical Investors Club YouTube channel. This video is going to be about Tesla. I've never written an article in the 5 years I've been doing this now on Tesla. I had one article that I wrote about what I called charitable investing. This is several years ago. It's kind of like ESG investing. Where I sort of explored the standards a person would use if they just wanted to kind of help a business out by buying their stock. And I talked a little bit about Tesla in that article, and Tesla was kind of the inspiration behind it, but it wasn't really specifically about Tesla. That was 3 or 4 years ago. So since then I've been silent on Tesla, and mostly it's because they haven't really been making any money. So the up until very recently, okay? So my typical analysis requires that a business have a track record of earnings. And since Tesla didn't have that, then I just kind of put it over in the too hard pile and didn't pay any attention to it. And I just found other things to invest in. So it's pretty much that simple. But now that it's making some money and it's in the S&P 500 index, I thought, hey, if I'm ever going to talk about Tesla and tell people what I think, now's the time. So this is going to be an avoid video where I'm like, just avoid the stock, and then I'll tell you the reasons why. And sometimes it's just, look, it's too hard. There's not enough information. Now, normally if I was just flipping through stock charts and historical data and I came across Tesla and I didn't know what the company did, pretend it has a different name or whatever, and I just looked at it, I would instantly just say, and not for me, and then move on. I mean, it's honestly less than 10-second decision. That doesn't mean that Tesla can't be successful. It doesn't mean the stock can't be successful in the long term. It just means that I don't have the ability to accurately and confidently predict what the future for Tesla is. And so if I can't do that, then I just go find other stocks that I can do that for. But I'm going to look at some of the things where I'm going to show you kind of my ballpark estimates, and then see if we can kind of put some of that in perspective here. Just to say, okay, what if I really tried hard and to value this, to place it kind of on a value spectrum with the data that we currently have. And so you look at the S&P 500 index, letting Tesla in, that's basically what they had to do. They have different metrics than me in terms of letting a company in, but they have some standards that they use. So my quality standards are higher than the S&P 500, than S&P. So I'm going to exclude more stocks than they might. But I really want to take a look here and just share a few of my thoughts about it. Again, I'm not overly negative. I'm not overly positive. I'm just like, doing the type of analysis I do. Tesla's not for me. So I'm going to look at the other stocks I've talked about this month as avoids, and see how their returns are doing right now. And then after that, I'll have a quick disclosure, and then we'll get into looking at some of the actual numbers. Okay, before we get into Tesla, let's just take a look at how some of my other avoid suggestions have gone. We've only been doing this about a month here, so we're just going to peek in really quick. I'm really interested in long-term returns, but I want to get in the habit of checking in each time I do one of these and seeing how my other kind of ideas have performed. So in order to be kind of correct, these stock prices need to be down. If they're up, that means probably you shouldn't have avoided them, right? So far, Franklin Resources has been doing really well. The price fell a little bit since last week, but it's earned money since I said avoid it, and the S&P 500 has actually fallen, so its relative returns are really good. So 1 out of the 4 is actually doing pretty good here. The other 3 I suggested avoiding, IBM, Illinois Toolworks, and Carnival Cruise Lines, they've all fallen quite a bit. So even though this one's up, the losers more than make up for it. And then on a relative basis, even though the S&P 500 has gone down, these have gone down significantly more. So, and when we average all four together, you would be down about 3.5% compared to the S&P 500's 2.2%. And so you'd be doing a little bit worse than the S&P 500 here if you didn't avoid these when I suggested to avoid them. So far, pretty good track record. You know, what I've noticed is about 4 out of 5 times I get this in the right direction, and usually with pretty good magnitude results too. So this is starting to look kind of like real life already, but we're going to get a lot more data points over a lot more time, and we'll see how this eventually goes. All right, I have a quick disclaimer, and then we're going to get right into the Tesla numbers. Hello everyone, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer, and this is a channel where I share my investing process and strategies using examples of stocks that comprise the S&P 500 index. These videos are for educational purposes only and are not personal investing advice. If you would like to receive analysis on stocks that are not part of the S&P 500 index, as well as receive additional in-depth portfolio strategies, consider joining the Cyclical Investors Club premium service. It has produced market-beating ideas and strategies, costs less than $30 per month, and it helps support the investor education and research that I share with the public. With that, let's get into today's video. Okay, I'm going to start with a fast graph, and if you've been following my other videos, you'll notice Tesla's fast graph looks a lot different than most of the other ones because there's hardly any green on it and it's all white, and that's because all these years they didn't really make any money, even though the stock price was pretty high. So eventually, though, this year they started making money, and they're expected to make money these 2 years. So I want to be, now, if I was just flipping through, sometimes I'll just go through in alphabetical order, and I will just look at the charts of stocks like this and look at their earnings and see what the story is. And if I saw this one, I would just immediately flip. I would say it's not for me. There's just not enough data for me to go on, maybe in a couple years. But what makes Tesla interesting is there is a category of stocks, and usually you'll find them in biotech or medical device makers, okay? And I haven't developed an investment strategy around this yet, but it's a definite pattern that I've found. And if you look down here, you can see that earnings are expected to grow really fast off the bottom here. Well, 37,000% or whatever when you first saw that, and then 80, and then 45. Okay, so if you invest in a medical device maker right when they first start earning money, a lot of times they'll have these 10 years, 15 years where they don't make any money at all. They're just developing their product, and same with some small biotechs. And then, if the biotech situation, if the drug gets approved and it's, profitable, then they'll start making money on it. And usually during that time period, I don't have an example right off the top of my head to pull up here, but if you looked at the first year or so, you probably wouldn't see a 13,000 PE, but you could see a PE in the several hundreds, because people realize that that's the beginning of potentially of a very long period of income and earnings that's going to happen over a long period of time, and they could have very fast growth, just like 80% and 45% is expected for Tesla. That's what makes this interesting, because there is a story and a path for Tesla to make money over the very long term. And there are situations where you could get in with a 333 PE, okay, and for that to be totally fine and okay and possible. So that's why I would say I'm not a person that's going to come out and bash Tesla, not the stock anyway. I don't think people are totally nuts for thinking they can make money in this company over the long term, all right? Especially now that they're actually at least earning money. Now, they're kind of getting into my category of stocks, at least. I probably wouldn't spend too much time on it, but I can see the potential here. So let's take a look at that potential. I would say one other thing I look at for companies like this, if companies aren't profitable, or investors are using revenue as their primary metric. If you look at Tesla's revenue, this is QuickFS. I'm sorry, this is a free webpage you can go to, and they have data. I like this because they have the gross profit already laid out for you, the annual gross profit changes. But first, let's look at revenue here. So if you're going to invest in a very speculative growth company, the main thing investors are looking at is revenue growth. And you can see each year for Tesla, revenue is going up, 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 and by significant amounts, Those are not insignificant. This year was a little slow, and they don't have 2020 in here yet. So the revenue story looks okay. But what I like to look at, for me, like a true speculative growth business, gross profits are growing. And they're usually growing pretty steadily unless there's some story why they're not. And this with Tesla is a little more mixed. So we have like a doubling of gross profits here, but then we immediately drop back down. So that's not great. I usually like to see it pretty steady, but then you have a huge jump, then you have a double, and then it's rising again here. It's still rising. So we're looking pretty good, but then we get up to these 2018 and 2019 and we're just flat. And so I realize there can be ups and downs to things with businesses like this, but if you were to let's look at Amazon, all right? So Amazon's another business that didn't earn money for a long time or didn't earn very much. But we all know they're a great company. They've been a great investment for people, right? So first we'll look at the revenue, rising, 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 very steady, very consistent, okay? So if we look at gross profit, we see the same story here, all right? Rising, 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 significant rise. I mean, there's a 25% rise there, okay? Again, another, almost 50%? And then, high teens maybe, I'm estimating. So, but you don't see any down years. I mean, this is a fast growing company, and they probably have the ability to make earnings if they wanted to, and they weren't reinvesting everything. So Tesla's gross profit trend is not what I would want. I mean, it's close, like it's close to being there, but it's just not. There's other companies like, Amazon or, some other fast growth company that is much steadier, much easier to predict. So it's okay. It's not clearly bad, but again, that would make me a little cautious on that. Okay, so now I want to look at a couple things. I just want to do a little experiment here. So the PE data is going to be worthless for us, okay? So because it just doesn't make any sense for Tesla. Now, the reason I'm avoiding it is because there's just not enough data. I don't have enough historical data to really do this, but I want to show you what Tesla's returns would look like if you bought the business with a certain amount of earnings growth. Okay, they're starting to grow earnings now. So we're just going to look at the business, okay? And typically, if I decide for whatever reason I'm only going to look at the business returns, I want the business returns to be at least a 9% CAGR before I get interested in it. So the experiment I'm going to do here is I'm just going to try different growth rates, earnings growth rates, and see what sort of business CAGR it produces. So if Tesla grew at 20% from here, I also started this. Let me show you. Let's see. I started this using 2022's earnings. So I'm assuming they grow 80% and then grow 45%. So this is whatever the growth rate is after this. All right. So this is more than a double, almost a triple in earnings that we're already building into these. So because I just wanted to be as optimistic as I possibly could. So these next 2 years go awesome for Tesla. They nearly triple earnings, and now after that you're gonna earn 20% a year. So that's what this is set up for. Okay, and my goal is to get this to 9%, and that's when I would consider it a buy. All right, so 20% produces a business CAGR of 2. I mean, it's positive, so that's good because they're earning money and it's growing. But the price is so high that it makes this really low. Okay, so let's try 30%. I mean, they're expected to grow 80 and 45, so maybe they can grow 30% for 10 years. Okay, every year, even during recessions or whatever. So now we're up to 3.5. I mean, that's still pretty low. I would actually, yeah, I'd sell a stock if I owned it, and that's what the business kicker was. So what if they can grow 40% a year for the next 10 years? Actually, the next 12 years, because I built in 2 years already. So, I mean, now we're into like a range where, okay, this is an okay business. I mean, I can find plenty of businesses right now that can do this. All right. That's if they grow earnings 40% a year for the next 12 years. Well, at least that. Okay. Well, let's try 50. All right. See where that gets us. All right. So now we're up pretty close, right? We're almost to 9. By the way, this business, it would be like buying a business for $100 and having them pay you back $8.51 a year. I mean, that's how to think about it. So if you bought the whole business and you got to keep all the profits for yourself, if Tesla grew at 50% every single year for the next 12 years, then this is what you're looking at. So that's pretty close to my buy price. I bet if we did 55, I mean, actually, you don't even need to get there. Probably 51, 52. 52% gets us over, maybe 51. So we'll just call it 50. So here's what Tesla would need to do for me to say this stock is a buy. All right, this is what I would have to be able to predict. I would have to say, okay, analysts are absolutely right. They're going to grow 80% next year. And then the next year, they're going to grow 45. Okay. And then for the 10 years after that, they're going to grow 50. We'll just call it 50% per year for 10 more years. If they can do that, Tesla is a buy right now. Okay. So using my standards, using the same standards that I use for most stocks. So now the question is it reasonable to think Tesla can do that? And, you know, my answer is no. I'm saying avoid it. So, but you could use this, and if you thought, man, I bet Tesla can grow 30% per year or something. And if I just hold it long enough, they could grow 30% for a long time. You know, that's not crazy. It's not totally nuts. They're doing something. They have a lot of different things they're doing with self-driving and everything. So, but you can see even then, you're not really looking at great returns. But you could calculate a buy price for this. So let's see. Let's see if I can find the price. So here's the price today. Let's say, you know, a Tesla falls to $600. Okay. Not totally unthinkable in the next year. All right. And then we think it can grow at 30%. That still is really low. I mean, so let's see how low the price would have to go in order to hit my goal if it, assuming it grows 30%. Let's try 400. Let's see what happens. So at 400, we're still not to 9%. So it still wouldn't be cheap enough for me to start kind of perking up a little bit. Let's try $300. $300 are still not there. Still $300 and 30% growth for 10 years. Not there yet. $250. Got to be getting somewhere close. Okay, now we're almost there. So almost to 9%. So for me, if I thought 30% was a reasonable growth rate after 2022, then 250, you know, I might be enticed. Now, personally, I always use a 20% maximum here, so I'd probably want it down more like 200 or something like that. But so that gives you some idea how if somebody forced me to kind of give them a buy price, my best one for Tesla, it'd probably be down between $200 and $250 per share. And that's, but I'm a conservative investor. I like deals that I know are going to work. So, and I don't know that about Tesla. So I would avoid Tesla. I'm going to put it in the, I am going to put it in the avoid spreadsheet, and we'll check in on it each week when we come back, just like I checked in on the others, and we'll see how it does compared to the S&P 500 over the next year or two, or however long I keep doing this. Thanks for watching. Make sure to subscribe if you found the video interesting, and I'll see everyone next week with some new videos. Later.